So, good evening to all of you, and let me welcome once again all of you to this program on how to excel in business valuations and pass the valuation exam of IBBI. Today, we are on our 14th day, and we'll be completing 18 days by end of this week. uh, let's hope that we would be able to finish the remaining portion, and in case if necessary, we will see as to how to adjust the and how to cover up the remaining portion. We were talking about pricing and valuation of bonds, and let's continue with that. We understood it as to what is clean price and what is dirty price, and we also did few examples on dirty price as to what is dirty price and what is clean price, and then we understood as to what is current yield, and how to calculate current yield. That is what we understood the other day, that is on last Friday. And then we also understood as to how to calculate the yield on treasury bills, and we also understood the fact that treasury bills treasury bills are issued in the denomination of 45 days, right? A denomination of 25,000 rupees, or in multiples thereof. Then we looked at the how to calculate the realized yield or holding period yield, and then we discussed YTM, what is yield to maturity, and different aspects of yield to maturity, and how yield to maturity is used for the purpose of decision making. We also understood the fact that YTM is like IRR only, and it is also calculated in the same way as the IRR is calculated. It is also used for the same purpose as the IRR is used. The only difference is IRR is used in the context of capex, and the YTM is used in case of fixed income securities. So that was the difference between the IRR and YTM, but both serve similar purpose, actually similar purpose, and that is to arrive at investment decisions. Then we looked at the relationship between between the bond and how to calculate the value of a bond, and we understood very clearly that valuation of bond is no different from the method of discounted cash flow. And because in case of discounted cash flow method, you project the future cash flows and then find out the discounted value of those cash flows. Same is the case with the fixed income securities also, or in case of a bond also. So how do you do the evaluation of a bond? You look at the cash flows in respect of that bond, and there are two cash flows in respect of the bonds. Number one is the interest, and number two is the redemption of the face value or the purchase price. And that is how we did this exercise, and came to a figure of 960.51 in the example that we were discussing. Relationship between YTM, coupon rate, and value of a bond, how are they connected? अगर एक बॉन्ड की YTM ज़्यादा है फ्रॉम द कूपन रेट, देन व्हाट हैपेंस टू द वैल्यू ऑफ द बॉन्ड. अगर सेम है, देन व्हाट हैपेंस टू द बॉन्ड. एंड अगर YTM कम है और कूपन रेट ज़्यादा है, then what happens to the value of bond. That is what we understood. And we also understood the relationship between market price, face value, YTM, and coupon rate of a bond, and how these four things are connected with each other. And then we looked at the price behavior of a bond. How does the behavior of a bond, or how does the price of a bond or value of a bond changes with the change in the market interest rate prevalent in the market at that point in time. And it's clearly understood, अगर कूपन रेट ज़्यादा है और इंटरेस्ट रेट मार्केट इंटरेस्ट रेट कम है, so it's going to be premium bond. And if the market interest rate and the coupon rate are same, it is going to be bond at par. and if the market rate is high, and market interest rate is high, and the coupon rate is low, in that case it is going to be a discount bond. And then we started discussing about the bond duration. We understood very clearly as to what is a bond duration. And what is a bond duration? Bond duration, for all practical purposes, is to find out as to in what period you will be able to, or you will be recovering your investment in a particular bond or in a particular fixed income security, not on nominal basis but on real basis. That means, in terms of discounted value, how much time will it take for you to recover your investment in case of a bond? We understand now very clearly, and remember, this is a likely question in the exam that you can get as to, is bond same as Macaulay? Is bond duration same as Macaulay duration? And answer of course is yes. Answer of course is yes, and that is bond duration is also known as Macaulay duration, and that is because bond duration was found by Macaulay, and that is why bond duration is named after him, and that's how bond duration is also called as Macaulay duration. And one more thing, which is again a area of likely question, as YTM is not same as the coupon rate, likewise duration is not same as the tenure of bond. तो क्या होता है, जब हम शुरू में पढ़ना शुरू करते हैं YTM के बारे में या फिर बॉन्ड ड्यूरेशन के बारे में, तो चूंकि हमको उसका प्रीवियस बैकग्राउंड नहीं है, तो वी टेंड टू थिंक कि YTM इज सेम एज यील्ड and bond duration is same as the tenure of the bond, which is not the case, as we have understood over last few so many sessions. Now, how does YTM affect duration? This is what we had discussed on last Friday. And how do we calculate duration? That is what we were at actually. So how do we calculate duration? How do we calculate duration of a bond? This is the new topic that we start with of our discussion about the fixed income securities.